And joining us right now to talk more about all of that is the Gartman letter editor and publisher Dennis Gartman. Dennis, good to see you, sir. Thanks so much for joining us.
Always honored to be on. Thanks for asking me.
Before we get to the fundamentals, if you will, in terms of earnings, let's talk technicals, because I know you like to look at the charts. What do the charts tell you right now, Dennis, in terms of where we are in the stock market rally?
I think it bothers me greatly that we have seen the highs, I'm quite convinced, in both the market here in the United States and globally. So I'm actually, in the long term, quite bearish of equities. I think that we've got the monetary authorities are here in the United States already erring upon the side of tighter monetary policy. We've seen the adjusted monetary base down about 10% from its highs. That's not going to change anytime soon. We're allowing the monetary base to roll off. We're probably going to see the ECB begin to tighten. The only bank of consequence that won't be tightening monetary policy anytime soon is the Bank of Japan. And as long as the monetary authorities on balance are beginning that process, they're taking away the liquidity that has sponsored the bull market. So technically, I'm actually quite bearish. In the short run, we got so terribly oversold 2 weeks ago that we're having a good bounce. We shouldn't be surprised by this. But if we took the Dow up another 150 to 200, I guarantee you I shall be selling.
Let's not forget, though, that there's this narrative right now that things are going to slow down. Deegan, they've got this massive balance to walk, the Federal Reserve does. Even Robert Kaplan from the Dallas Federal Reserve last week said he wants just 2 more rate hikes, total of 3 for this year, because while he's expecting 2.6% or 2.7% growth this year, he thinks growth plummets down to 1.75% by the end of 19. So there's this narrative that things are going to start slowing down in a big way.
And that's something that echoes how Stephanie Pomboy has felt about this economy. But to what we were talking about the Federal Reserve winding down that balance sheet, they've laid out a plan to do that. And it would require something really extreme and dramatic in the economy for them to change course at this point on that note. And I don't think people really understand what this economy looks like, what the markets look like without all of that buying by the Federal Reserve. And one thing I'll just point out, and it's to kind of pivot a little bit, but watch these NAFTA negotiations, which are going on. They resumed today behind closed doors with Robert Lighthizer, the trade representative, representatives from Canada and Mexico. They're trying to do something by the end of next week. President Trump is threatening to change it or pull out of it on his own. Can he do it? There's a lot of pushback in Congress. Again, Europe and Mexico have just inked a trade deal. We're getting left behind, and this could roil markets. I think
if anything's going to roil markets, it's no NAFTA deal, and that the U.S. pulls out, and then we've got no trade going on with Canada and Mexico. I totally agree that markets are looking. Go ahead, Dennis, jump in.
Well, yeah, we have to pay attention to what's going on in the NAFTA talks, because what a lot of people are forgetting to understand is that there's a presidential election coming up in Mexico on July 1st, and the fellow who's going to win that, unless something untoward is to change, is an overt Marxist, and we have to pay attention to that fact. We need to get this NAFTA agreement passed, and passed very quickly, and if it doesn't pass in the next 2 or 3 weeks, or certainly in the next month, there's trouble ahead.
Dennis, you think we've hit peak market right here, and I think one of the things to be cognizant of is that because of the multiples, and you don't think that we should be trading at 18 times earnings, maybe we should be trading times 16 times earnings, because we're anticipated to make $150 some this year in earnings on the S&P 500. Next year, 170. So the earnings story is going to get better. But saying? Are you saying that people aren't going to be willing to pay up for that?
I think 18 times earnings is relatively high. We could get to 20 times earnings. I don't doubt that for a moment. But what bothers me, and what people are not paying attention to, is historically, stock markets do indeed make their highs long before economic activity turns down. What ends up happening at the bottoms is, as the monetary authorities begin to become expansionary, that money moves into equities before it moves into plant, equipment, and labor. And at the peak, as plant and equipment and labor demands capital, and while the monetary authorities are beginning to tighten, there's less liquidity to sponsor plant, equipment, and labor, and so the money comes out of the stock market. It's very normal. It's very historically precedented, and I think that that's indeed what's going to be happening here over the course of the next year or two. So, yes, the economy in the United States is doing quite well. I do not doubt that for a moment. It's going to continue to do well for another year or two, but it's going to be very difficult unless the monetary authorities become expansionary once again, and they shall not do that. Dagan, I think, is absolutely right. They've laid out the plans very clearly as to how they're going to run off or allow the debt securities the treasuries that they own to run off out of maturity, they're not going to be expansionary, and that's going to be contractionary for equities over time.
So what do you want to do then? What do you do with the portfolio then, Dennis?
I think you go to cash. I think you go to short-term Treasury securities. I think you go to the ETFs that are short-term bond funds. And I think you sit on the sidelines and wait. I think sometimes the sidelines is not a bad place to be. Not too many people want to always be 100% invested. As I've said in my newsletter, in a bear market, there are three positions you can have: very bearish, modestly bearish, or neutral. Right now, perhaps neutrality is the best position of all to take.
All right, we will leave it there. Dennis, always great insights from you. Thanks so much.
Thank you.
We appreciate it. We'll see you soon, sir. Dennis Gartman there.